Welcome to Markets Now. I'm Michelle Rook with Ken Beadle, Paradigm Futures. It was a mostly lower day in grain and livestock futures trade with a few exceptions in the hog market. But Ken, soybeans kind of took the brunt of the pressure on Tuesday, and so did soybean oil. And a lot of that had to do with some of these heavy deliveries here on first notice day, right?
Absolutely. Tuesday morning, we found out that we had about 500 contracts delivered against the soybeans, and then over 2,000 contracts against the soybean oil. That's a large number, and it was definitely construed bearishly by traders. Maybe a little more of a surprise that we had that large of a delivery in the beans, just because of the fairly large carry. It didn't necessarily seem to make sense to deliver the beans as opposed to just rolling at the big carry. But, given that we did get 500 contracts, that was construed a little bit bearishly as well. And the combination, really hurt soybeans this morning.
And of course, it was end of month and all the grains were down. And so some of that, was it also due to the fast planting progress that we got in the USDA report?
Yeah, Monday afternoon, we had much faster progress than I think some people in the trade were looking for. Soybean planting progress was a full 10 percentage points ahead of the 5-year average, with corn 5 percentage points ahead of the 5-year average. In the Western Corn Belt particularly, farmers were very active until about last Friday, when the rain started to come, and they pushed really hard to try to get stuff in ahead of those rains, because there was more rain in the forecast after the weekend, and we're already starting to see that. So, they pushed hard. We've gotten ahead. The big question for the marketplace is whether or not the average is going to catch up to the pace, because it really doesn't look, with the weather forecast that we have, as if we're going to be able to get much done here either this week or even potentially part of next.
No, I agree with you. At what point does the market become concerned about that? Do we have to get into mid-May, or when?
Well, May 15th is kind of an important day. The USDA uses that date in their crop modeling, and if you can maintain a faster pace than normal, which in corn would be at about 75% complete as of May 15th, they might actually assign a little bit of a yield bump to that type of a pace. You start to get behind, and you're well behind 75% on May 15th, and they'll actually attribute some yield declines potentially to that type of a situation. So it's going to get real here in a couple of weeks for sure.
Yeah. So speaking of weather, I know we have some rain chances in parts of Russia. Was that also maybe a pressuring factor for that wheat market?
Yeah, now, so we're hearing different things about that. Certainly this week, we had been here, or this weekend, we'd been hearing that some rain was in the forecast. One of the widely followed meteorologists was taking some of that rain out of his forecast this morning, and so it almost felt to me like the heavy deliveries in Chicago wheat may have had a bigger impact on the wheat market than the rain in Russia, or the potential rain in Russia. But they certainly do need it, and if it would happen to fall, it would add some yield without any doubt.
Yeah, we didn't talk about that to start off with, but 1,151 deliveries against Chicago wheat, that was a little bit of a surprise, wasn't it?
Yeah, it was. The deliveries just generally across the board, with of course the exception of corn, were just a little bigger than the trade was thinking, and with end of the month and a decent rally, it just and then of course some lower outside markets too, with crude oil down, and worries about the economy. The stock market was hit pretty hard today. It just all seemed to line up for a negative day in the grains today.
Yeah, and as you mentioned, outside markets, higher dollar was probably part of that. And then when you get the end of the month, you generally do get some profit taking in a lot of markets, and it does impact money flow, doesn't it?
Yeah, absolutely. The funds were definitely sellers today. Now, whether or not they were liquidating recently established long positions or adding to longer established shorts, hard to know. But they certainly took the crop progress report and some of the USDA data and all of the poor economic data and the worries about lower stock market. They took it all in stride and decided to sell the grains today.
Yeah, we have sources saying that the GREET model for SAF subsidy credits are going to be, that guidance is going to be released this afternoon. Yeah. You almost felt like maybe somebody knew something here with the way soybean oil has acted the last couple of days, or was that all about people knowing about these heavy deliveries?
There are always some people that are going to know about heavy deliveries ahead of them actually taking place. I do think the EPA concerns are certainly a market factor. Whether or not traders or people knew what the outcome is going to be is certainly debatable. But, I think that there's been an awful lot of signaling from the administration that the ultimate rules are not going to be as favorable for corn and soybeans as a renewable fuel source as the American farmer certainly would hope that it would be. We'll just have to see what the EPA has to say.
It was a tough day in the cattle market on Tuesday as well. So how much of that was end of the month profit taking versus more of these H5N1 headlines that we've been seeing?
Well, I think the H5N1 headlines definitely had some impact. Of course, we discovered that there was virus in a dairy in Colorado, and that gets to be uncomfortably close to an awful lot of feedlots in that part of the world. So that becomes a concern. Then you hear the USDA is going to be testing ground beef for the virus. And of course, that puts a shudder through consumers. They obviously have reason to be worried. They don't want to contract this themselves, and the ultimate potential on beef demand could be significant if the USDA starts to find that virus. So obviously after a couple weeks of fairly strong cattle trade here, we had some back and fill because of that situation. You don't discount, by the way, the stock market getting hit pretty hard today and the impact that might have had on cattle as well.
Yeah, no doubt. But the funds right now, they lack confidence to, I guess, add to their longs. Do they lack enough confidence that they're going to continue to liquidate? Is that your fear?
Well, it certainly would be a fear, and it would be a reality if if the USDA starts to come up or starts to discover things that impacts consumer confidence in beef. If that ultimately passes, like most of us think that it will and hope that it does, at that point in time, we still have a fairly positive fundamental situation for cattle, and would not be at all surprised to see prices start to move higher again, and the funds start to support that with buying as well.
Mm-hmm. Hogs ended up mixed on the day after basically seeing some higher price action to start with. I don't know if that was cattle hog spread unwinding here into the month or not, but where do you see this hog market going from here now?
Well, seasonally we would anticipate that things could go a little bit higher, but we've sort of run into a wall on the cash side here. Cutout has been a little bit sloppy as of late. The CME index has started to move a little bit lower contra seasonally. Really hard to maintain a large premium that the June and the July and the August months have over the index when the index is actually moving in the other direction. So yeah. I think it was a pretty easy sell today against a higher market.
Yeah, that futures premium gets wider as you get into the back months. So we'll see if we can hold things together here or not. All right, Kent, thanks so much for joining us. Kent Beadle with Paradigm Futures. Remember, futures and options do have substantial risk and are not suitable for all traders. And that is Markets Now.